Hey everybody. Okay, so the Fed just raised interest rates on Wednesday. What does that mean for somebody who's shopping for a mortgage? Well, the good news is very little to nothing. The Fed rates don't really impact fixed rate mortgages. 15-year, 30-year fixed rates doesn't really have much of an impact on mortgage rates. What the rate that the Fed raises does impact is things like HELOCs, adjustable rate mortgages, auto loans, credit card rates. Those types of things are very heavily impacted by the decisions the Fed makes on a rate level. But the good news is if you are shopping for a mortgage, the fact that the Fed raised rates probably won't do much of an impact. Now, long term, when the Fed raises rates, generally speaking, down the road you will see the mortgage rates start to creep up to start following the trend of the Fed's rates, but generally not a big concern right now. Mortgage rates are more closely tied to the 10-year Treasury bond market. That typically has to do more with what the long-term health of the economy looks like. When investors are feeling good about the economy and investing in Treasury bonds, rates tend to go down. So bond rates go up, mortgage rates go down. When they're not feeling as good about the long-term economy, they stop investing in Treasury bonds. When that happens, bond rates go down, mortgage interest rates go up. That's a much better indication as to what rates are going to be doing in the short-term near future. Follow the 10-year bond market. But overall, shouldn't have too big of an impact with the Fed raising rates. Now, if you do have a HELOC or an adjustable rate mortgage or some revolving credit card debt that you might want to consider consolidating that and refinancing that into your existing mortgage, or finding a way to turn that into a fixed rate loan, because those adjustable rates are impacted by the Fed raising rate. So those are the loans that you want to be concerned about. If you have a HELOC, your rate will probably go up. If you have a ARM loan, your rate will probably go up. And if you have revolving debt, your rate may go up here soon. So think about consolidating that or refinancing. That would be a much better benefit if you're concerned about what's going on with the Fed raising rate. That should do it for this weekend. Everybody have a great day. We'll talk to you soon.